This video is going to discuss one of my personal favorite trading systems. Currencies do not go up forever, nor do they go down forever. And what I've found is typically after a currency goes up 3 days straight, or 4 days or 5 days, it will tend to reverse, especially at the statistical likely highs, which are our upper containment bands, daily statistical high, or any counter trend sell signal you get as the market's going up. It could be a Fibonacci profit target level, but basically you look for currencies that have been up 3 days straight, and then you look for reversals today at the highs. Currencies that have been down 3 days straight, like the dollar yen in this example, you can sort this column right here by up down, and the Australian dollar, Euro dollar, and New Zealand dollar, if all three have been up 3 days in a row straight, they're very likely to reverse today at various resistance levels near the highs. The dollar yen, on the other hand, because it's been down 3 days in a row, is very likely to reverse at the lows and go up. Now always keep in mind what the weekly and monthly trend is. These currencies over here, the top three, are some of the strongest weekly and monthly statistical trends. So some days the market will keep trying to force its way higher before it ultimately comes down. So you may get into a trade that has a small loss, 5 or 10 pips, and then you catch a 30, 50, or sometimes 100 pip trade. Let's go over some examples. Here's the euro dollar. This one had closed up 3 days in a row straight. As you can see on the bottom of the chart, this one is very strong. The daily trend's up, weekly trend's up, monthly trend is up. And typically I like to wait myself. If it goes up today, I draw a fib on that up move. And typically I like to wait before the 1.382 and 1.618 fib level gets hit before looking to sell it. You can also look to sell at the upper containment band. The red level is a likely reversal, and the white level is an extremely likely reversal. Currencies rarely go outside of the upper white band. They may go 5 pips, 10 pips. Some days, which are rare, it goes 10, 20, 30 pips above, but usually the market reverses back. You can see the other day it hit the white band, reversed back, hit the lower red band, reverse up, hit the lower white band today and reversed up, hit the lower white band and reversed up, and so forth. The market usually, as you can see, reverses when it gets outside these extreme levels. I also manually draw Fibonacci profit target and retracement levels on the chart, and they automatically show up for all of our mentor students as gray lines. These gray lines are very high probability likely reversal areas, and even more so when they're above our upper white band. So we know coming into today that the euro dollar is very strong, but it's been up 3 days in a row, and therefore very likely to reverse at the red or white containment bands, and if it goes beyond that, very, very high probability at the upper fib level. And when you add in the Fibonacci profit targets off of the last swings, the 1.618 level off of that swing, and the 1.618 level off of this swing, almost to the pip, the market was likely to reverse because it's been up 3 days in a row. If you ever get a move up, and you can start looking for sells at the red band, if you see that the statistical strength is not that much, as you can see down here, anything under the dotted white line is not extreme strength. And so if it goes up to these likely reversal areas without that much strength, it's more likely, in our opinion, to come down. Anytime you get a counter trend sell signal, and in this instance our trend reversal sell signal and our stat tools counter trend sell signal both gave sells at the same time, and the market reversed from 11 all the way down to 72. So that's about a 40 pip drop. Then it worked its way up to here. Again, it was strong but didn't have extreme over the top strength, and then it reversed. And once you see some intense weakness come in, even if the longer term trend's up like it is the euro dollar right now, when you see extreme trends like this, they usually come down. So as the market retraces back up, hits the weekly pivot level right here, which is a sell area, it's a resistance area, very likely to go down, and you can draw your fibs off of the previous swing, and it's likely to stall at the 1.382 Fibonacci profit target or the 1.618. And in this case, we have a monthly pivot level here. Our trading zone's likely low. We have 3 counter trend buy signals right here, all telling you the market's likely reverse, and you can see it did go back up another 40 or 50 pips. But the point is, we knew coming into today they were looking for sales. So you might have gone short right here, made 20 or 30 pips, got short right here, and whether you got out at the hourly moving average with this counter trend buy signal, you retraced back up. It was extremely weak statistically, even as it was going up. That's a very high probability trade in and of itself, and then it fell another 100 or so pips. And because again it was so weak, you might have looked to short here, you might have looked to short here for some smaller trades. Let's look at some of the other examples. The euro dollar was one such example of 3 days up. Let's look at the Australian dollar. This one also has gone up 3 days in a row, but be careful, the weekly and monthly trend are very strong, and sometimes, not today, but on some days you might have to get into a trade and have a loss and then another loss before ultimately the upwards momentum runs out of steam and the market reverses. Here's the Australian dollar, and again this thing went up and it came really close to our upper containment band. It did not have extreme weakness, so you might have taken some small little 10 or 20 pip trades here, and I always like to draw on the first big move up, the Fibonacci levels. And my favorite place to look for sells, especially since we know this currency has been up 3 days in a row, is the 1.382 to 1.618 Fibonacci profit target. Now in this case, this was such a phenomenal trade because it was above our upper statistical likely high. It was at the previous day's high, which is a resistance sell area. It was at weekly R1 pivot level, which is also another likely sell area. It was also at the whole number. Whole numbers and half numbers tend to have major orders clumped there. And as you can see, the white circle was also one of our trend reversal sell signals. And on top of all that, it was a 1.382 Fibonacci profit target. So you can see this level got hit, and almost immediately the market fell 70 or 80 pips. You can see extreme weakness here, and if you wanted to sell the retracement, again, the lower containment bands make excellent profit targets. And whether you got in and you held on all the way down to the bottom, fell 130 pips, or you got in, got out with 70 pips, got short here and made another 70, that's up to you. One of the other reasons why this was a good trade is if you draw your fibs on this move, it happened to be the 50% Fibonacci retracement level and the monthly R1 pivot level, which once a price level gets broken, it tends to act as resistance. It tends to be selling there. So there are two reasons to sell that, in addition to anytime you see an up move with statistical weakness, it's an extremely good trade. The next example is the New Zealand dollar. Now this currency, again, has been up 3 days in a row, and like I did for all the other moves, anytime you see a move up, you draw your fibs on there, and the Fibonacci profit target, upper containment band, great place to look for sells. Be very careful selling up here if you see extreme strength, but in this case it had moderate strength. It wasn't at the extreme or higher level, which is our dotted line. So you look to sell right here, and it might stall here at the previous week's high, and if that gets broken, the hourly moving average is frequently a place it stalls. So you have, as you take this trade, your profit target level about 30 or 40 pips below, and it shot right through that level, and then you had a ton of counter trend buy signals right here, and the previous day's low, which is also a support area where there's likely to be some buying, and you might get out of the trade. Comes up a little bit, the bars go red again, you go short, and you might have traded again to the bottom. But again, another example of this trade in action, you will find that oftentimes this is a very high probability trade. Now, the last example is a currency that's been down 3 days in a row, but it is one of the weakest currencies. The weekly trend's down, the monthly trend's down, the daily trend's also weak. It's been down 3 days in a row, and we want to look to buy it at the lows. Okay, so as this comes down today, you can see it hit our Fibonacci level. This level most of the time is where the low is going to be. This is manually drawn on the charts by me over multi-day and multi-week swings. And you got a counter trend buy signal right here, and the market wasn't that weak. You got long and it went up a little bit. You got a counter trend sell signal right here, which did tell you that the market was likely to go down. You might have only taken a few pips out of that trade. Again, just like before, anytime you see a move, you draw your fibs on there, and the Fibonacci profit target levels are much higher probability trades. We had a counter trend buy signal right here. It was right near the lower white containment band, and you can see it didn't have too much statistical weakness, and then the market shot up 10, 20, 30, 40 40 or 45 pips before a lot of counter trend sell signals came in. So that's how this system works. Anytime you see a currency go up 3 days straight or more, or down 3 days straight or more, you tend to look for reversals at the highs or low. If it's been down 3 or more days, you look to buy the bottom. If a currency's been up 3 or more days, you look to sell the high. And always draw Fibonacci levels on swings, and especially when Fibonacci profit target levels get hit and you do not see extreme weakness, you want to get into those trades.